Think back to your very first job. Think about what you were making per hour or your very first entry-level salary. If you're like most people, it wasn't a lot. But somehow you paid your rent, you bought your groceries, and you survived. Now, look at what you make today. Chances are your income has increased. Maybe it's doubled. But let me ask you an honest question. Does your bank account actually feel any different? Or are you still staring at your screen a few days before payday, wondering exactly where it all went? This is the income trap. It's a psychological phenomenon known as lifestyle inflation or lifestyle creep, and it is the single greatest threat to your long-term financial freedom. Today, we are going to break down the exact mechanics of why this happens, why your brain is wired to keep you broke, and the 3-step modern blueprint to break the cycle permanently. Lifestyle inflation doesn't happen overnight. It's a silent, creeping tax that you willingly impose on yourself. It starts with a promotion, a new client, or a year-end bonus. Your brain immediately registers this as a win. And with that win comes a dangerous narrative. I worked hard for this. I deserve an upgrade. So you replace the reliable sedan with a luxury lease. You upgrade from a standard apartment to a premium downtown condo. You swap the home-brewed coffee for a premium daily ritual. None of these decisions are inherently evil. You did work hard. But here is what you aren't told. Every time you upgrade your lifestyle baseline, you create a new financial floor. Yesterday's luxury seamlessly becomes today's necessity. Psychologists call this the hedonic treadmill. Human beings adapt to positive changes incredibly fast. The rush of dopamine you get from driving that new car or living in that nicer neighborhood fades within a matter of weeks. But the monthly payment? That stays for years. You end up running faster and faster on the career treadmill just to maintain a baseline of happiness that used to cost you half as much. Why is the treadmill so hard to step off of? Because we live in an era where spending is highly visible, but wealth is entirely invisible. When you see your colleague drive into the office parking lot in a brand new $70,000 SUV, your brain processes that as a visual metric of wealth. You think, they are doing well. I should be doing well too. What you don't see is the 5-year loan, the high interest rate, and the fact that their savings account is practically empty. We are biologically wired to benchmark our success against our immediate social circle. This is social proof. Marketers spend billions of dollars leveraging this exact instinct to bypass your logic. They don't sell you products. They sell you an identity. They convince you that a certain level of income requires a certain look. But let's establish a fundamental truth right here. Income is not wealth. Income is the amount of money you generate. Wealth is the amount of money you keep and multiply. If you make $250,000 a year, but spend $240,000 to maintain your image, you aren't rich. You are just a high-consumption courier transferring money from your employer straight to luxury brands. You are one bad month away from financial ruin. So, how do we fix the mindset and break the cycle? You don't need to live in absolute deprivation. You just need to change the rules of the game. Here is the 3-step blueprint to master your path to financial clarity. Step 1. Implement the gap audit. The next time your income increases, you are going to establish a mandatory buffer period. When you get a raise, your lifestyle is banned from changing for exactly 90 days. For 3 months, pretend that extra money doesn't exist. Let it accumulate in a separate account. This breaks the immediate impulse to dopamine loop and allows you to evaluate your true needs without the emotional high of a fatter paycheck. Step 2. Reverse the flow. Most people budget backwards. They get paid, they pay their bills, they spend on entertainment, and then they promise to save whatever is left over. The problem? There is never anything left over. You need to reverse the flow. The day your income hits your account, Your investments and long-term savings must be automatically deducted before you ever have a chance to touch them. If you get a $500 monthly raise, automate $400 of it directly into your investment index funds. You can spend the remaining $100 guilt-free. You are building wealth on autopilot while still enjoying the fruits of your labor. Step 3. Define your internal baseline. Stop letting society dictate what your comfort looks like. Sit down and write out what actually brings value to your life. If you love travel, budget heavily for it. But if you don't care about luxury cars or designer clothing, aggressively cut those expenses out, regardless of how much money you make. True financial sophistication is alignment, making sure your capital flows exclusively toward things that genuinely elevate your life, not your ego. The ultimate goal of personal finance isn't to see how many luxury items you can accumulate before you die. The ultimate goal is autonomy. It's the peace of mind that comes from knowing that if you want to walk away from a job, start a business, or take a year off to travel, you can do it without asking anyone for permission. When you control lifestyle inflation, you buy your freedom. You buy your time. And time is the only asset that you can never get more of. The next time you find yourself tempted to upgrade your life just because your bank account allowed it, remember, real status isn't something you drive or wear. Real status is a quiet, well-funded bank account and a mind free of financial anxiety. Building wealth isn't about luck, it's about strategy. If you're ready to master your mindset and take full control of your financial future, make sure to hit the subscribe button for your weekly upgrade. Head over to our community docs to download our automated budget tracker. Thank you for watching, and we'll see you in the next video.